Joining me now is Marc LoPresti, Chief Market Strategist and CEO of Market Rebellion. Marc, good morning.
Good morning, sir.
We just heard Brooke break down a whole bunch of numbers, and I know people at home, heads are exploding like, what does all this mean? Today is one of the most data-heavy days we've probably done for the year. Which indicator do you think carries the most market-moving potential? Because that's what consumers and everyday Americans want to know.
Well, you know, it's not what my favorite number is or yours. It's what Chairman Powell's favorite number, or J-Pow as I like to refer to him, Nick. And that is hands down the PPI, the Producer Price Index, one of his two favorite gauges of inflation, one of the two things that the chairman and the Fed governors, people often think it's just a one-man band. It's not. We have a whole band of Fed governors that vote on monetary policy. We're going to be looking very carefully to see the street, as your previous journalist just covered, expecting 0 to 0.1, essentially flat, and easing on a year-over-year basis around 2.4%. If we get that print, and I expect that we will, because remember, this is the September data, so it's not going to have the same impact of the government shutdown that we expect the October data will show, then we're going to get what we need to keep that 25 basis point cut on the radar next week.
Marc, that's the question I have there, because I think so many people are still confused about where we are exactly. I've heard some analysts describe it as driving in a fog, where we're moving forward, but we really can't see ahead of us because all this data, while the government still hasn't released October CPI or the October jobs report, both canceled because the BLS couldn't collect data during the shutdown. How does that complicate the Fed's December rate decision even further?
I mean, I got to tell you, this is a narrative that drives me crazy, okay? Because everybody on Wall Street, professional traders, hedge funds, even individual traders, they don't look at the BLS data that's compiled with surveys that are sent in the mail that are dated, antiquated. It's almost December. We're talking about September data. Professional traders look at real-time data that they get minute by minute, tick by tick. We're not relying on the BLS. That's why I don't think, unless there's a significant difference in expectation, because headlines move markets, it's not going to matter that much, Nick. Smart money knows where the numbers are at. They're not waiting for the BLS to be released.
Well, private sector data can fill in some gaps, but how much can the Fed really rely on patchwork indicators when inflation has been so unpredictable, which is why the Fed chair has been hesitant to really do a huge interest rate cut?
I think that's, to be candid, I think it's a bit of an excuse. I think that the data is available for the world's largest money managers to be able to successfully navigate using private data. And in fact, the Fed has, as much in some of the commentary and different Fed governors during the government shutdown, has admitted that they've been looking to many of those reliable private data sources. And you're right, it's a patchwork. There's no doubt. We don't have that one singular, elegant, unified BLS official print. And it's going to take time for the governments move like aircraft carriers, not speedboats, to move to that patchwork of private data. But don't be fooled, my friend. The data is there, and it's accurate if you know how to read it.
If you know how to read it. Marc LoPresti, thank you so much. Hey, happy Thanksgiving to you and your family.
To you as well, sir.